mute YouTube for a second. All right, here we go. Welcome, everybody, to episode 66 of the Volatility Barometer. So you may have noticed, of course, it is Thursday. We typically do these Fridays, so if you're tuning in the future, this is not normal for us. But the reason that we're doing a Thursday stream is my wife has a dinner planned for me tomorrow night, and she's a wine sommelier. I'm sure you've heard of me talking about that before. And she's got a couple of things planned. So I'm an extreme lightweight when it comes to drinking. So I thought, it's probably not a good idea. I might be in pretty rough shape if I do the live stream tomorrow after dinner. So here we go for a Thursday live stream. It should be fine. Probably not that many people coming because it's a pretty odd time, but that'll just mean that you can get more attention to get your questions answered. So go ahead and start asking those questions in the comment section. As always, I'll do a little bit of a presentation. Shouldn't be too long today. And then, of course, we'll circle back and I will answer all of your questions. So, by all means, let me know if the audio is wrong. I'm back in Taiwan, if you haven't noticed. I was in Dubai for a while. And first time setting this up again in this country. So if something is glaringly wrong here, let me know. Otherwise, I just want to draw attention to one thing really quick here. Some people probably don't know this. That's the YouTube channel. But I actually do have a clips channel, and I just want to remind people that I do. Obviously, we've done hundreds of videos and live streams, and I get a massive number of questions. And anytime that there's some really interesting questions, I tend to just chop them up in these little clips. And they're not very long, just a few minutes, good for binge watching. And they are edited, so they are, pretty reasonable to watch. And there's lots of them, right? I try to choose the ones that are quite specific to volatility and investing. A couple of little things sneak in there about, Bitcoin and whatnot. But for the most part, these are just quick little clips about all the most popular questions that get asked. So I'm actually going to just drop this right into the comment section right now. And later on, if you like, you can go ahead. Hopefully that works. You can actually go ahead and subscribe to the Clips channel. And if you're pretty regular around here in our VTS live streams, of course, you will probably recognize some of your questions because we have the usual suspects. I always see kind of the same names in there asking a bunch of questions, which is awesome. And so you'll probably recognize, oh, that was my question. Thank you for answering. So you'll get a much better response if you ask a question here, give you an extended answer. Of course, you can email me, but definitely on live streams, this is the best place to do it. So the first thing that we're actually going to do, and I have intentionally, again, not looked at the market, but we are going to jump into the Wheel of Fun strategy yet again. I believe, let's just check for a second. This is week 8, I guess. Week 7, because there was a couple there. So week 7, we've taken a trade every week. I didn't do a live stream last week, so I just kind of did one on my own. It was pretty uneventful. I sold a put. It didn't get exercised. And I did one last week as well, and I'm going to look at it right now, and then I'm going to make the decision on a Thursday what I'm going to do. And it's going to be a little bit tricky, of course, because typically I will let these expire, but the market is down minus 0.76, which probably means the VXX is up a little bit. It's going to be pretty close, but let me just lightning round through what this strategy is for anybody not familiar. Of course, we've done live streams about this many times in the past. You can tune in certainly to the last 4 or 5, and you're going to get a full explanation. But essentially the Wheel of Fun, you can do this on stocks and ETFs. It's a totally viable strategy for pretty much any security out there. But we've just chosen the VXX, and we're on a 7-week cycle, like I said. So essentially what we do is we sell a cash secured put. Now, what cash secured means is that essentially we are just selling the equivalent notional value as if we were trying to short the underlying product itself, where, options are a little bit more efficient, of course, than the ETFs or the stocks, and we don't want to get ourselves into massive leverage. So everything is cash secured. All the cash is set aside. It's in the account just in case we get assigned the shares. Of course, options, you could do massive leverage, but then if you do get a share assignment, you could be in a little bit of trouble. So these are just very conservative trades. And of course, we sell up for about a week out. In the case of the VXX, we're doing put options. And 2 things can happen. As always, it can expire in the money, which means we will get assigned those long VXX shares. And then, of course, we would turn around and sell a covered call. But it could also just expire out of the money, in which case we keep our premium, we go right back to step one. And the very next week, typically in a Friday live stream, hold on a second. Oh yeah, I am screen sharing. Sorry about that. Typically in a Friday live stream, you'll see the new trade for the week. And then, of course, we've only actually had it done once where we had to sell the covered calls. But again, two things can happen. You can either have your covered call expire in the money, in which case you would lose your long VXX shares, which is the point here. You'd go all the way back down to step one and we'd start a new cycle for the next week. Or they can expire out of the money, which means we keep our shares. We have to do back another covered call for the next week. And we sell these quite aggressively just to dump those shares. This is not a strategy we're trying to capitalize on the underlying movement. We're just trying to bring in premium on two sides of the trade, hopefully a short put, and then get assigned and a good strong covered call, and we get out of the trade. So you can see why I call it the Wheel of Fun. You can see the steps. You sell a put, hopefully you get assigned, you sell a covered call, you lose your shares, you go back to the first step. And you can just go round and round this wheel, especially when you're in a situation. This is the VXX for this year. You know, if you're in a crashing market like this with respect to the VXX, a strong market for the S&P, you might find that you are in the trade on the covered call side for a little while longer. But if you're in a situation like this, it's possible that you're just bouncing around in those puts and not actually getting assigned very often. So you can do it in both situations, but the flattening out here, this is why it's been a mostly short put, because we're not actually going too far deep into those VXX numbers, down lower. And so it's just kind of cycling short put contracts. And what I wanted to highlight here, because it will touch on the second segment that I'm going to do in this live stream today, is I wanted to highlight the advantage of doing this. Some people might not actually understand, why would you do this? Why wouldn't you just short the VXX directly? Don't do that, especially undefined. A lot of people say, well, why wouldn't you use this strategy or that strategy? That's what step two, when I actually go through my rundown, I'm going to actually talk about my diversified strategy. I have many, many different volatility strategies that combine into one, and I'm going to explain all of them. But the truth is, different strategies apply to different markets. So what you can notice here is that we actually initiated this position in the very first live stream way back here, where the VXX was trading at 2480, somewhere around 2480. You can see the VXX is 2461. It's basically unchanged for the last 7 or 8 weeks since I started cycling through these trades. Well, is my profit unchanged? No, I'm actually up almost 15% in the last 7 weeks, and the VXX itself has done nothing. Plus, you have to remember, there's no upside risk to this strategy. If we do get a massive volatility spike, well, nothing really happens. If I was in a short put, well then fine, I just get the premium and I'm out for a little while. If I was in a covered call at that period, well then I'm just going to lose my shares and I'm going to get the premium that way. So there really is no upside risk here. The only risk is if the VXX happens to just cascade lower, then it's possible that my premiums wouldn't be keeping up to that price going down. Now, you'd be surprised how far you can go and still salvage the position and still make money. So even during a situation like this, those premiums can start to get pretty juicy and you can still be just fine. But the other thing to remember is, of course, you will very likely have a diversified portfolio with many other assets that are net long the market. So even if you were to get caught in something like that and it kind of goes down here, this is the current put that I have on now. If it goes down here, okay, fine, some losses maybe, but the rest of your portfolio is going to be very strong and it's going to more than make up for it. So interesting to note that the VXX has been unchanged and our profit for these 7-week trades, pretty good. 15% in 7 weeks, taking on no risk at all. That's pretty solid. Now it's probably going to dip down a little bit because now what we're going to do is we're going to assess the market and decide what we're going to do. Now, obviously, just, side note, this is a little bit tricky because, of course, right now it's Thursday. Usually I do my live streams on Friday and I still have to kind of fake it for the last 3 hours of the market. This strategy does work best if you wait till the market close or, the last hour or so you're very sure what's going to happen. Right now it's a day and a half away. Pretty much anything can happen. So I'm going to kind of have to fake it a little bit here. And let's just decide what we're going to do with this trade. So my position is this one. And I sold it for 67 cents. And it's currently right now at 40. So I am profitable. and I can basically decide what I'm going to do. So let me just think about this. I'm doing this on the fly, so I haven't actually planned much out here. One thing that I could do, because mine's a 24.50 strike, you can see that down here. So if this expires tomorrow afternoon below 24.50, I'm actually going to be assigned 1,000 shares of the VXX, and I'm going to turn around, and for the next cycle, 8 days away, which would be 7 tomorrow, I would jump in here and I would sell one of these really juicy covered calls. I'd go very close to the money, sometimes even a little bit in the money, because remember, I just want that big premium and then just get kicked out of the trade and start over at step one. So I could probably make the assumption that unless something cataclysmic happens, I'm probably going to get assigned 1,000 shares tomorrow. It's probably going to do its normal thing and bleed down. Now, obviously tomorrow on a Friday, especially since we've got a little bit of news this week, obviously anything could happen. VXX could be way up here tomorrow for all I know, but I have to fake it. So let me just assume, just for this trade, that let's say that this expires below 24.50. I'm just going to make the call right now. So I'm going to keep my 67 cents. I'm going to keep this as is, and I'm going to be assigned 1,000 shares. So let's go ahead and fake this. Let's go ahead and buy 1,000 shares, right? So we need 1,000 of these. We need to buy, of course, and let's try to get one below the mid. Let's do a super lightning fast 30-second rule here. Remember, I'm just trying to get something close to the mid. It's a live stream. I'm not going to wait very long, but let's just kind of click through these numbers. And let's get some long shares going. All right, now I have 1,000 shares, and we're going to pretend it's Friday afternoon right now. And now that I have 1,000 shares, well, what am I going to do? Well, now I have to sell a covered call. And this is where we have to decide, all right, well, how aggressive am I going to get? I could do a 24.50, which is the strike essentially that I'm going to be assigned at, and I could get about 88 cents right now. That's a very good premium, so it's going to be very difficult not to just take that one. But I want to highlight two sides of this. The 25 would make it more likely that I keep the shares for another week. So I could drop it down to 70 cents and possibly keep those shares. But sometimes what you might want to consider, just to make it even a little bit safer, what if you went in the money? Now, if you look at this one at 24, if I just kind of try to take a freeze frame here, about $1.12 right now, $1.12 and 88. $1.12 plus 24 is $25.12. And then the 24.50 plus 88 is going to be 25.38, right? So if you do the 24.50 and I lose the shares, this one would actually make more money, right? Because I don't lose that 50 cents. My 1,000 shares are purchased here, the assignment number at 24.50. But this makes it very likely that I'm going to actually get kicked out of the trade. So sometimes you want to do this. It's going to depend on your risk tolerance and what you are as a trader. But for me personally, I like to get the premium on the put side. I do like to get assigned the shares. This is one thing, you will make more money long term if you're not afraid to get those shares. Sometimes when people are selling these put options on something like my Wheel of Fun, they like to sell them way out of the money because they think that the goal of the strategy is to just sell puts and never get assigned. But what you're actually trying to do is quite often get assigned so you can get that covered call, and that's the one that's really going to pay you a little bit more to get out of the trade. So if you're the type of person that, you feel a little bit uneasy holding that VXX long shares, you can go ahead and go in the money and just make it far more likely that you're going to get kicked out of the trade. And yes, you will be giving up a little bit of that money, but it's actually still quite profitable. But if you are like me and you really don't mind, like I've done this thousands of times, I completely don't mind holding long VXX when it's part of this strategy. Obviously, it is near suicide to just hold them independently long and not do anything. That's just going to bleed down over time. You're going to lose money. I don't do the contrarian, try to time long volatility or anything. But if I know that I'm going to get nearly $1 a week, well, I mean, even if the VXX bleeds down to 20 over the next 2 months, I'm basically going to get 10 cracks or 8 cracks at that, 8 or 9. I could get $9 out of that. So I could make a fortune if the VXX goes to 20. So I'm actually not afraid to hold shares. So what I would do is I would actually go ahead and do, I got to move this window. I would go ahead and do this. So 10 shares, of course. Remember, one option contract is equal to 100 shares of the underlying. So I have 1,000 shares. And so I have to sell a covered call at 24.50 for 10 contracts. And again, I would do my 30-second. I'm not going to go to 91. Let's just get this trade done. All right, there we go. So we're good to go. So now that is for next week, September, and we're just going to pretend that this one's expired. I'll just clean it up tomorrow and we'll just forget that whole thing ever happened. But as you can see, now we are on this stage where we actually are selling the covered calls. So now we're here. We hold the shares, and now we're trying to actually get paid to get rid of them. And the goal is to get rid of them. A lot of times people also might be tempted in this type of strategy to think to themselves, well, maybe I can time this a little bit. Now that I hold the shares, and imagine if it's on something like Apple, because you can do this on stocks as well. Well, now that I hold these shares, what if I try to be a little bit clever and, delay that selling of the covered call, or maybe put it way out of the money so I can get some capital appreciation as well? You can do that, right? I'm not going to tell anybody what to do, but the way that I trade this strategy, I really do like the highest premiums possible. So aggressive selling of the puts, bring in the most premium you can on the put side. And then when you're in the trade, aggressive covered calls and get out. I'm not trying to say, well, maybe if the VXX goes up over the weekend, maybe I can get a couple of dollars. So I'm going to sell, or I'm going to wait till next Tuesday to sell it. I don't do that. It's a premium collection strategy. So that's it. Pretty simple stuff, but I've been going over this now for 7 weeks, as we can see. And now maybe I can actually even really quickly just mark this new trade. So I'm going to assume that I'm going to get my 67 cents, because I am just going to wait until this expires and then clean it up after. And then the September 1st, we sold a covered call. And we got, what did I get? How much did I get for that? Where's my covered call? I got 90 cents. Good. That's pretty nice. 90 cents. So now I'm in a situation where next Friday I can tune back in, and actually what could happen is my profit could actually even be significantly higher, right? Let's see what it could be now. If I just get kicked out of these shares, update that. 432, I could get, I'd be up at about an 18% profit. And again, if that were to happen, you have to remember that I would have made 18% and the VXX would not have gone down at all, which I think is pretty solid. So that's why I do this strategy. And now I'm going to smoothly transition into the second part of this live stream today. And the second part, this is basically influenced by a lot of people asking me a question that resembles something like, let's say I'm talking about the Wheel of Fun. I will get people in the chat section. I'll get people emailing me. Well, why do you do that? Why don't you do this strategy instead? Wouldn't it be better if you did, trend following on the SVXY, for example? People think because you're talking about one thing that that's kind of what you do, right? Well, I do want to kind of pull the curtain back a little bit here and show you that I completely agree. And I actually do trade a fully diversified portfolio of volatility strategies. So these first few slides here, this was from a presentation, a much larger presentation. I'm just going to pull a few slides out of it. But my general trading philosophy can kind of boil down. This is the VXX Options. This is temporarily put on hold. You can see we stopped about, last year sometime. And it will come back, of course, in the future. But I got extremely busy and I had to choose either VXX or VXX Options. We used to have both services, and I just kind of defaulted to VXX. But we'll circle back to this, don't worry. But essentially, I'm not going to go through this too quickly or too slowly, but trade small. This is very important. So when you're dealing with something, I have many, many different option strategies in my portfolio. The last thing you want to do is have something that can actually tank your portfolio. So for example, our Iron Condors, I even subdivide that further and I take 3 smaller trades. Instead of 1 Iron Condor, I take 3 very small ones, stagger those out as well. And so no trade can take it down. So the first thing would be to trade small. Second thing, in my opinion, trade systematically. This doesn't mean 100% rules-based, but it does mean that you have very specific things that you're looking for, very specific metrics. And as you know, a lot of my strategies are literally totally mechanical. Like if volatility and these 5 metrics are below this level, then we do this. and very mechanical. So I like systematic trading personally for me. And then the third thing, which I am going to talk about now, is diversification. I don't just trade that Wheel of Fun strategy. Essentially, when I'm doing these three things combined, and that equals long-term success. Law of large numbers over a large number of occurrences, you can expect to do pretty well if you follow like this trading philosophy. But true diversification, well, what does it mean? As far as a short volatility portfolio, again, the first thing that you would want to do is trade multiple strategies. So I don't just trade that one volatility trend. I actually do trade many. So let me just kind of share what my main ones are. I have more than this, but just if you wanted to see sort of behind the scenes how this all pieces together, then these are what I would call my top 5, right? Let's say I have 8 or 9. These are the ones that I spend the most time doing. So the first one, tactical volatility strategy. This is a tactical strategy, meaning we are rotating in and out of positions based on current market conditions. So I've got a bunch of volatility metrics that I track. Some of them are included in our volatility dashboard. Some of them are not. But I'm basically cycling through, and when everything's calm and stable, we are holding long SVXY. When things start to get a little elevated and a little bit dangerous, in this section here, we'd be holding gold. And then when the market is all out crashing and things are getting really ugly, that's when we can hold VXZ, which is a slower moving long volatility ETF. Slower moving because it uses the midterm futures, not the short-term futures. But it's a tactical volatility strategy, okay? So that's the first one. That one's in VTS. If you want to see why I do this one is what I would consider very strong trend following, right? When we're in the SVXY, we want to stay in that position for a while. When we're in the VXZ, we want to capitalize on just, pandemic style crashes, something like that. But I consider it very strong trend following. The next strategy we have is volatility trend. And this one uses broken wing butterflies on VXX or UVXY. We kind of flip between them. And right now we're not in any trades because nothing is jumping out at me as terribly advantageous. But essentially when we do these butterflies, it is a basically market neutral, tends to be a little bit biased to the short vol side, and very slow moving. So this one is completely different from the tactical volatility. The bias is different, the underlying tickers are different, everything about it is just a different strategy, but it is also short volatility. This will make money if the volatility bleeds down. The only danger here is if it goes down too fast. But this is not meant to be a strong trend strategy. Like this one is far superior performance-wise. This one's over 30% a year. This one is more in line with that, 12 to 15 number that I talk about quite a bit. The third one is what I talked about, the Wheel of Fun. So this one is different than the other two, of course. This is a strategy that, as I showed you, it can actually make a 15, 18% return in a couple of months, even if volatility doesn't go down. So even though this is kind of quasi-short vol as well, it also qualifies as a completely different market bias that can be used within a broader portfolio. So at least you've got something working for you that's market neutral and making money. Fourth thing we have, of course, I've mentioned it several times, but I'm not going to get into it, my VIX Options Strategy. My longest running, I've been doing this since, 13 years and counting now. It's my highest returning strategy. I'm not going to get into it because, of course, a course is coming. VTS Options is going to return, and you're going to want to learn exactly what it is in a series of videos that break it down. Like a 5-minute thing on a live stream is not going to do any justice. But this one is, again, market neutral volatility on the VIX this time. Remember, the VIX is not the same thing as the volatility ETFs. Volatility ETFs trade off the VIX futures. The VIX index trades based, of course, it tracks the VIX futures, but the VIX itself is technically a different underlying than the other ones. Different than covered calls and puts, different than butterflies, different than the SVXY. So it does add that layer of diversification. Then the last thing I do, volatility step. Again, it will be coming in the VIX Options course, but essentially what that one is long put verticals on VXX, UVXY, sort of a month out cycles where if you imagine the volatility going down, we're just trying to get it so it kind of steps downward, and we're using long put verticals to do that. A vertical put spread Can just show you what that might look like. So for example, if we did, I typically do it about 1 month out. It's not really timed very well right now, but let's just say a 25, 23. Again, that window is always in the way. 25, 23. Let's change that one to 23. And this would be a typical vertical that I would do, something like that, where basically a month from now, I'm expecting the VXX to decline. And it's defined risk, so obviously occasionally you get trades that it just doesn't go down and the VXX doesn't do its normal thing like this. Maybe it just flattens out and you take some losses. But the strategy, of course, steps really well long term. If you imagine this stretched out, most of the months you're just stepping lower each progressive month downward. So you can imagine this, it's called the volatility step. Clever, I know. It's basically just stepping volatility. But that's another strategy that I have. So the reason that this works as a diversified portfolio is because, again, 5 strategies. But true diversification also means different assets. You don't do everything on the same thing, right? You wouldn't do an entire portfolio on the SPY. You'd have gold and bonds and utilities and real estate. Well, option trading is the same thing. You don't do everything on the same underlying, of course. You do, sometimes you're using butterflies, you're using puts and calls, you're using straddles on the VIX, you're using put verticals. All of these have different market biases, and that's why it adds diversification to a portfolio. The third thing, by timing. Again, I don't just dump all my money on 1 or 2 days. Like if there's some Fed meeting on a Wednesday, for example, and the news comes out and everything's kind of pretty stable and calm, I wouldn't jump in the next Thursday and initiate trades on all 5 of my strategies, right? You want to stagger it out based on time. You want to enter throughout the month. So, different time frames, of course, for these strategies. The fourth thing, by duration. Again, not everything I do is weekly cycles. That only applies to the Wheel of Fun. I typically sell weekly because it works out really well. You can churn those trades over time, and there's no risk of the short-term movements, right? The reason short-term options are so dangerous is because they can get out of hand very quickly. But if you're on the other side of the trade, again, volatility spikes don't matter, so I can churn very short-term contracts. But the tactical volatility strategy, for example, this thing might stay in a trade for months. You can see basically this strategy for us, or for the strategy itself, it's basically been short volatility since March 24th. So March 24th, where is the SVXY? SVXY, of course, is the minus 0.5 times inverse, so going up is good for us. March 24th is right there. So the strategy got into a fresh new position there and has not exited since. It's just all the way. There's been a little bit of chop, but entered, exited. So you can see that this is a totally different time frame than weekly VXX short put options, right? Totally different strategy. The volatility trend, I tend to do about 1 to 3 weeks on these butterflies. So let's say average of 2-week cycles. Volatility step is monthly cycles. I tend to sell one more or less every month, give or take. And then the VIX Options Strategy, it's very layered, very active, probably 20 to 30 trades per month. And I start a month out and I'm still adding positions right up until the final week. So you can see, again, all 5 of them have totally different duration. And then the last thing, volatility bias. This is important. You don't want everything you do being strong short vol because there's plenty of periods in the market where nothing is happening. There's also periods in the market where volatility spikes. The last thing you want to do is have everything at the same exposure and market bias. So we have actually things that are trend following, tactical volatility. We've got a little bit of short bias, which would be this one and a little bit of that one. This is kind of what you would say market neutral-ish. Volatility step, bias to the low side. Tactical volatility has that high side long volatility. So I've got the full spectrum. I've got strong trend, weak trend, totally neutral to a little bit up, and I've got long volatility, all in the same volatility portfolio, so that when you put it all together and you kind of, it's a lot. I understand that, not all traders do this. And remember, this is just my short vol positions. I've got 3 tactical strategies at VTS. I've got Iron Condors. I've got basically everything, earnings trades. I'm a very active trader, always have been. but my style is super diversified across the board. So I would rather trade 15 strategies with very small allocations to each of them, making sure that each individual strategy is diversified into a subcategory. Like I said, for Iron Condors, it's only, a small percentage of my overall picture, but it's also a diversified portfolio within that, right? VIX Options, just maybe 10% of my portfolio, but within VIX Options is 20 or 30 trade layers that just keep getting cycled in. That's what I'm talking about. So diversification within a diversified portfolio that is diversified across those 5 things. So you can always, let's not do that. Open that one. Across these 5 things. So many different strategies, different assets, different types of options with different biases, different timings, stagger it over the entire month. Don't just dump all your capital in a 2 or 3 day period. By duration, make sure you do some weekly churning. Make sure you do some that kind of just sit there and capitalize on the long trends. Make sure you've got different volatility biases along the way, a lot of market neutral stuff because the markets don't always go down. Despite what people might tell you, VXX doesn't always go down. So you can understand what's going on. Super diversified portfolio. And then again, last thing before I get to the questions, if you do want to see just the VTS, trust me, it's not nearly that complicated. Most of the things I was talking about there is in a separate, more active trading service that was temporarily shut down. So it'll come back. But VTS is super easy. This is literally, you could follow my portfolio at VTS a couple minutes a day. Anybody who's a subscriber will attest to it that, look, there's quite often a blog article or a video to watch or a live stream to tune into, a couple of things today to do, but more or less the trades themselves, each strategy is just 1 to 3 trades per month, and each trade takes a couple of minutes to execute. So we are quite literally talking about 5 minutes a day, tops, to follow my VTS strategy. So don't be confused by my layers of diversification. A lot of that is for people who are specifically joining a community for very active trading. So wanted to get through all that. All right, how long did that take? 32 minutes. How about we just skip the VIX futures contango stuff for today. We'll push that to next week. And let's just dive into the questions because as I was talking there, I can see quite a few of them being added. And I anticipate being here a little bit late. I'm back in Taiwan, so it's extra late here. Right now, it is 1:30 in the morning for me. And I worked out pretty hard today, so I am a little bit sleepy. But, I'll tough it out. Don't worry. All right, let's rip through some of these questions. This is what people are here for. So, did you change the tail risk trade point from 0 to 60 to something lower? The reason I ask is we traded out a SPY at 58.54. Oh, okay, yeah, you've definitely missed something. That was changed, boy, I want to say a year ago. I think what's happening there is in the actual strategic tail risk, let me fill in everybody else what you're talking about here. Strategic tail risk strategy, this threshold line is actually at 55. But if you go to the YouTube channel, this might be a quick opportunity for me to plug my YouTube channel here. But if you went to the YouTube channel and you watched the strategy video on the strategic tail risk, which would be this one, in that video, back when I did it over a year ago, the threshold was at 60. But it was very shortly changed after that. What I essentially am trying to do, I'm always trying to have our tactical strategies switch out of positions at different times. So all 3 of them use different volatility metrics, and all 3 of them use different underlying securities for the safety positions, right? Utilities and cash, gold and long vol, cash, long vol. Sometimes we use utilities here. Sometimes we use, or real estate. Sometimes we use bonds. We're trying to diversify everything. So strategic tail risk will get kicked out the quickest because it's about 55%. And yes, that was changed. I don't mean to make you feel like, oh, wow, you haven't been paying attention at all. But yeah, that was changed a long time ago. It's 55 now. All right. Have you ever looked at the CNN's Fear and Greed Index? No, I can't even imagine what it would be comprised of. And, I don't want to hack on it because I don't know what it is specifically. I've seen it on Twitter. People post it all the time. Here's the level. Look out. I'm sure it means nothing for trading. But I don't even use the VIX. So I'm not hacking on this specifically and saying, oh, CNN's awful. I'm just saying any pre-packaged volatility stuff that you see, the skew index, the VIX, the fear and greed index, all of these things are basically just marketing materials. But if you really want to get the good metrics, you've got to dive a lot deeper than that. You've got to check the momentum between all of them, the different thresholds, how it's moving over time, what this one is in relation to that one, the percentile rank, where is it in comparison to where it was 6 months ago. Things like this are going to really give you the best trade signals. You're never going to look at something and just be able to decide. I mean, it's totally different. I can say that my volatility barometer does actually do that if you look at the level and it's 44, that's a very good trade signal. But this isn't just some, fear, greed indicator, or it's not the VIX. The VIX is probably 2% of this, right? It's essentially, sorry about all the scrolling, a bunch of volatility metrics, cash VIX term structure, I always like this, plus some others that I just didn't feel like people would want to dive into, but I did include things like traders VRP and whatnot. But you're not going to find any individual like VIX index level readings that are very useful to you. So not necessarily saying that one's bad. I don't personally know what it is, but you're going to have to go deeper than just that. I'm sure CNN is not giving you good trade signals. Let's put it that way. Do you block, hide, or obfuscate YouTube chats or comments that don't include profanity? So I've never blocked you. So I've blocked, I think, 2 people in the past. I blocked a person like 3 years ago. I blocked them for 1 week. They tuned into a live stream. They were, basically monopolizing the chat. And so I entertained them throughout the duration of the live stream, answered all the questions, and then blocked them for 1 week and said that, look, you're not going to be blocked forever. If you want to behave like a normal human being, you can come back. No problem at all. And I unblocked them, and they've been back once, and then they kind of just ducked out. Hate watching people never really makes any sense to me. So my thing is basically give somebody the opportunity to say, look, this is really stupid. Obviously, I'm kind of a loser if I'm hate watching other people. I should probably have better things to do with my life. And so I've blocked that person for about a week. The other actually, I didn't block. There was another guy named Balapur or something. He maybe a month ago, he did the same thing, just totally monopolized the chat. And I said I was going to block him for a week, but I didn't actually hit the block button. He didn't come back. So the only other way that you might have had something missing is I basically have 3 rules. You hit on one of them. Don't use profanity. And it's not because I'm a prude. It's because the YouTube algorithm will, flag things and put me in certain categories. So don't be swearing all the time. But you privately, if we're having a beer, I'm not going to say, hey, don't swear. It's not like that. Like that scene in, what was it, Avengers, when Captain America was kind of swearing and everybody's making fun of him. I'm not a prude, but don't do it on YouTube. The second thing that you could do, don't post third-party links, right? That's a big, terrible thing. So typically I will instantaneously put that into the just don't ever come back spam. There's a thing that says, can't remember what the word is, but you can just hit the button and that person's just hidden from the chats. And the third person is, again, you've seen me entertain these clowns that come and hate watch. For some reason, they have nothing better to do with their lives. I don't say don't do that to me. You say whatever you want to me. I have thick skin. Literally nothing you say could ever, as I say, put a dent in my self-esteem. Nothing. Hit me with whatever you've got. Call me a scammer, call me a liar, whatever. Don't insult other people. Like, don't go in the chat and call other people names or because I want this to be an inviting environment for people to come and get their questions answered. And sometimes that means that somebody asks a question that's either obvious or, not to say kind of dumb, but, a little bit new. It's fine. I was there as well. When I first started this, maybe I had some dumb questions too. So don't do that. Outside of that, there's really nothing that you could ever do that would, I don't care. I don't block. I think on Twitter, there's nobody has ever been blocked. On YouTube, there was one guy for 1 week. That's it. So now I am aware, I'm not a real YouTube analytics type of guy. I don't really understand how the algorithm works, but I've seen many other YouTube videos where YouTube itself sometimes just doesn't post the chats or the comments. And so people think that they're being either shadow banned or their comments are being blocked. It could literally just be because YouTube has billions of videos or whatever it is, and it's basically algorithm run. And sometimes the algorithm just sees something, some combination of words or whatever it is, and just won't show it. So don't worry. Nobody ever gets blocked. No comments are ever hidden. Say whatever you want to me. Swear at me all you want. Actually, don't do that on YouTube. But in a polite way, call me all kinds of names you want. You're going to be fine. No, join my Bitcoin Discord. Here's a link. Don't do that. That's an instantaneous delete. Other than that, hit me with your best shot. Thank you for sharing your alpha with us. Oh, that's nice. No problem. That's what I'm trying to be here for. I'm curious to better understand what were the metrics to enter into SVXY on August 1st. Nothing. I showed you my spreadsheet. August 1st is not significant in any way. The only reason August 1st was the day we entered was simply because this is a strategy that was launched at VTS all the way back in 2012. It's been in the portfolio all the way to, I think, February 9th. Don't quote me on that. Might have been the 14th. February 9th, 2022. So basically, we've only taken a year off, and I just put it back in the portfolio. I kind of sensed a little bit of difficulty in the VXX. Kind of turned out to be right and then a little bit wrong, right? I saved the strategy from what would have been a drawdown, and then I didn't jump in quite quick enough. I could have probably jumped back in May. But overall, no damage done. But the reason we jumped back in on this date was simply because that was the date that I put it into the email. But you can see the strategy itself, as I showed, it initiated the original position on March 24th and would have just stayed in the entire time. So again, that date there is when it was initiated and no change since then. So again, August 1st, didn't mean anything. Sorry to confuse. That was just an internal VTS thing. All right. Does it have a meaning if the S&P is going up and the VIX is going up, or when, let me just check for sure whether that's hinting to the CNN fear thing. Hold on a second. You're not on the right screen. Sorry. Again, this is probably a good example of what I was talking about, that YouTube just doesn't show me everything. This is the first I see of anything from you in the chat section. So let me try to piece this together. Does it have a meaning if the S&P is going up and the VIX is going up, or when the S&P is going down, the VIX is going down? Okay, so maybe there wasn't something previous. You're asking whether single-day correlation. Obviously, we know that the S&P 500 is inversely correlated to the VIX. Turns out it's about 70% of the time. So S&P is going up, 70% of the time the VIX is going down, and vice versa. But that leaves a very large swath of data, like 30% of days they're moving in the same direction, either both up or both down. So I wouldn't read too much into short-term correlations that start to align. I know, again, I kind of hack on a lot of the Twitter people because I call it just popcorn marketing. They're just throwing something up there and it kind of sounds cool and maybe it'll stick. Maybe people will look at it, but it doesn't really mean anything. A lot of people will say, oh my God, S&P up, VIX up, look out. This is just danger. No, it's not. 30% of the time this is happening. So it's totally normal. Now, I will say if it's happened for an extended period of time, if you get 5, 6, 7 trading days in a row where it's happening, at that point, I might start to pay attention. But single days or 2 or 3 days, it means absolutely nothing. It's just, remember, the VIX index is simply a statistic. It's not even a tradable index. It's just a statistic reflecting S&P 500 options activity. People are jockeying their positions all the time. There's nothing saying that the VIX and the S&P have to be inversely correlated. That's not how it works. I know that plays well on Twitter, but that's not actually how it works. Do I invest in individual stocks? Not really. My only history, I've got sort of a good history and a bad history with individual stocks. The good history is I didn't know anything back when I started investing. So I think right around 2000, don't quote me on this, 2002-ish, out on my daily runs, I used to carry one of these big Discmans. Remember we used to do that? I don't know how old you are. I think you're significantly younger than me. But out running, I used to have to carry something that's big enough to hold a CD, plus bigger to have, some shock absorption so you could actually run in it. So it's a pretty big unit. And I used to hang it on my belt and it pulled your shorts down and, it's pretty bad. So then I got my first iPod, right? And the iPod was just revolutionary when it came out. And so I thought, oh, I'm just going to buy Apple stock. And I didn't know anything. And so I bought Apple stock in like 2001 or 2002, right when I got my first iPod, only because I loved it for running. And I bought it at $27. This was all pre-split and all that, so that's a crazy low number. And then I thought I was a genius. It tripled in value in a very short period of time, and I sold it. And then I had a pretty good success there, so then I bought Yahoo stock, and it went up again. It doubled or tripled, and I made a little cash there. I thought I was a trading genius. And then I got in about 2005, I got into options trading and basically stopped trading individual stocks until right around 2009, just after the financial crisis. I started getting into trading Chinese ADRs, and took a real beating on those. And, just trading individual stocks that had good news breaking that, this stock in China is going to start doing deals in the U.S. It's going to start, building wind farms in Texas. And, so I dumped a bunch of money into those and they got absolutely hammered. I embarrassed to say, but I lost literally hundreds with an S, $1,000 on those Chinese ADRs. So a good experience, Google, Apple, Yahoo, made a bunch of money. Chinese ADRs, lost a bunch of money. Most of my trading history, I've been doing this for about 17 years now, 90% options, and then a few tactical strategies at VTS, as you've seen. So that's a long way of saying, nah, not really. Options, ETFs, basically it. So the section of the VTS portfolio that is dedicated to Iron Condors is that mostly cash for the majority of the time. So the Iron Condor strategy, I would say, is quite active. We subdivided into 3 sections, but I don't know if your question has to do with the idle cash or whether it's literally like this. Volatility trend. This strategy will go through periods where if you get the VXX in a really extended long-term trend, the options market starts to catch on. And what ends up happening is those premiums start to get a little skewed and disadvantageous, I would say. So when you're in a situation, we were quite active for quite a while with this strategy. And now in the last month and a half, we've basically just been doing nothing. So the Iron Condors doesn't very often do that. I'm quite active here. But you might be referring to the idle cash because you can see this is a 20% allocation, but I really only allocate based on the total size of the portfolio. Because an Iron Condor with 20% capital, Iron Condor is extremely capital efficient. That would be an enormously big trade. And high fives all around if it works out well and it makes money, but that could be a devastating loss if it doesn't work out. So I just size these totally differently. I take it way, way down, which does mean that there's guaranteed to be 11% idle cash in this strategy. Now, I'm jumping ahead here and I'm risking getting my email inbox bombarded here. So allow me a little bit of leeway to explain a future explanation that's coming. But there is something that you can do with that idle cash because it's basically guaranteed. I'm never going to allocate 20% to Iron Condors. That would be insane. One adverse market move and I could lose a chunk of my portfolio. So these are just small Iron Condors layered down to 3. It's very, very safe. No individual trade can take anything down. And our Iron Condor strategy is super consistent, just 18% a year. It's been awesome. Idle cash though. You're jumping ahead a little bit, but inside the Iron Condor strategy, there's a 30-part video course available to everybody who joins VTS. You can actually jump into this. I hope I'm logged in. I'm not logged in. Sometimes it doesn't. Sometimes I have to actually turn off my computer to log in. So let's see if it lets me do this. I hope it works. Oh, sometimes it doesn't work. I was worried there. Okay, let's move that window again. So there is a full 30 video course available for the Iron Condors. There's 2 videos missing. So the one of them is a calendar trade, just an example of a calendar. The other one that is missing is what can we do with the idle cash. You can see the performance there. It's pretty solid. What do we do with the idle cash? Well, if I just give you a little teaser, and again, I hope I don't get bombarded by emails, but you can see this position here, the SHV. This is basically just a super short-term 0 to 3 month dated treasury ETF that anytime I have idle cash, I just stuff it in there. And the reason that I don't want you to get ahead of yourself and do the same thing is because I need a video to explain this concept, because a lot of people misunderstand the difference between literal idle cash and buying power. These are not the same thing. So I don't want people to look at their account and go, well, look at that. I've got $60,000 of buying power. Why don't I just dump that into the SHV and everything's great? Well, you may find, depending on what broker you're using, what type of account you have, if it's a margin account, what levels of margin they're asking for, you might find that you've made a mistake and you're actually getting charged interest on trading on margin with your buying power. That's not what you want to do. That SHV is only making 3.35% annualized. So you have to make sure that any money you put in there is literal cash and you do not exceed your actual cash value. Margin accounts require you to actually know the difference between cash, net liquidation, buying power, all of these things. So don't jump into that trade just yet. Trust me, give me a couple weeks. I'll get a video stuffed into that 30 video course and it'll explain, yes, technically speaking, there is going to be some idle cash there. And you can, and the same thing, by the way, applies to the volatility trend. There's going to be another lesson stuffed in that course as well, talking about this. And so I got ahead of myself. I hope I don't get punished in my email inbox tomorrow. Okay. Why does not sticking to your strategy for a day not result in a 50-50 chance in winning, losing, but result in losing more on average instead? Why does not sticking to your strategy for a day not result in a 50-50 chance in winning and losing, but it results in, okay, I know what you're saying. So I send out the daily emails at about, technically speaking, it's 12 p.m. Eastern, but I typically try to get them out at about, 11 or something like that. Just for the people in Europe, they can have a little bit more time to get their trades in. It's very, very important, I would say, that people enter and exit the trades on the same day. And this is kind of what you're getting at. Let's say you skipped the signal and every day you delayed it by 1 day. You're kind of saying, well, how come the result isn't 50-50 if you do that? Technically speaking, isn't on a very short-term window, I've always said the market is kind of a random walk. The difference and why you would, and quantifiably, I can just show you the results are actually worse if you delay the signals 1 day. Why? Well, not to brag too much, but what would that be saying? That would be saying that my entries and exits are actually robust enough that you're noticing a lack of performance if you delay them by a day. That's a good thing. I wouldn't want to have a strategy that, look, if you skip a day, it doesn't matter, right? It's going to be the same 50-50 result the next day. No, it's not. There are times when I get it wrong. There are times when we absolutely whipsaw. We've had a few just a couple weeks ago where I'm in the SPY and then I'm out in cash and then I'm right back into the SPY. And every time you do that, you bleed a little bit of capital. That's called whipsaw. Welcome to trading. There's really no way. I did actually a clip on the Clips channel talking about that. There's really no way to avoid it. But there are times when I say exit and you needed to exit because volatility got elevated. We moved into safety. If you didn't take it that day and you thought, you know what, he's probably going to get whipsawed. I bet you that Jackson Hole thing is nothing. I bet he's going to be right back in. I'm going to try to anticipate this and not get out today. I'm just going to wait till tomorrow. Okay, most of the time you're going to be fine. There will be times when the reason I exited was because volatility was going the wrong way and the next day is the punishing one, right? A lot of times that's what happens is that you get a little bit of a signal. And I'm a person who focuses entirely on volatility metrics. So the market's telling me something. I need to get out of this trade today. If you don't, the next day could be very punishing. There have been times in the past where it can be a very big difference. And again, I just want to remind people, I'm an extremely conservative, safe trader, but we do use some leverage in our strategies. We do use the 2 times QLD in the defensive rotation. Now, I do mention if you've got lower risk tolerance, go ahead and use the Qs. It's fine. The SVXY, even though it's a minus 0.5 times leveraged product right now, you could say it's watered down, it still has a beta over 1, right? So the The beta factor, let me try to find it. The beta factor of SVXY is actually stronger than the S&P 500. So you could say that it's leveraged as well, even though it's 0.5. So what can happen if you skip a day? Most of the time, nothing. Like you're saying, the markets are kind of a 50-50 random walk day to day. But there will be times when you really will kick yourself for not listening to those signals. Now, I can't give out any personalized investment advice to anybody. I can only show you what my portfolio is doing. That's what VTS is. Every day, I'm telling you exactly what trades I'm in. All the education is there. You've got hundreds of articles and videos explaining why. There's a daily blog. I'm explaining my entire portfolio to you, but it's my portfolio. I can't make you do it. So if you want to skip a day, be my guest. I would say not a good idea. Despite some whipsaw and, sometimes you end up just looking like an idiot. And I have my fair share of times when I have losing trades and I look like an idiot and I look like I don't know what I'm doing. But again, not to build myself up too much here, I kind of do know what I'm doing. So you might want to heed my advice when I say, I'm getting out of this trade today because volatility is going the wrong way and I don't want to be in this thing tomorrow. I would say that. So that's why it's not 50-50. It's because I actually kind of do know what I'm doing. Try to say all that without being too arrogant. I do try to remain humble as I can. All right, we know the barometer is comprised of many volatility metrics. I am just curious if every metric you use in the barometer is always converted to percentile rank before I compute the barometer value. Yes. Yeah, all of them. Exactly. Yeah, of course, all of them. They're all converted to something that can translate into a value, right? So a lot goes into this. It's a spreadsheet that might nearly crash a computer if you open it, but it all condenses down into a very clean number. And it doesn't range from 0 to 100, the way that percentile ranking works. And I'm not using, again, not all the metrics that I'm using are totally skewed the same direction. That's not diversification. If you just use everything that it's going to be either extreme up or extreme down all the time and they just move in tandem with each other, that's not diversification. So there are many metrics in here that won't be flagging the same levels as the other metrics, right? Some of them are almost inverse, to be honest. If you look at the volatility metrics, there are times when one of them is just like, you might get the trader's VRP that's just absolutely opposite the volatility barometer or the cash VIX oscillator. Some of these things temporarily in the short term might be very different. That's what that's what diversification is. So it'll never go to 0. The lowest number ever was about 13, and it'll never go to 100. The highest ever was 91. But the barometer is percentile based. You're not going to be able to reverse engineer it despite people's attempt to do so. I know that there's nothing wrong with that if people just repeatedly ask questions trying to reverse engineer my work. It's natural, right? I've been successful. People want to copy it. Great. But trust me, there's a lot that goes into that. You're not going to be able to do it. But yes, percentiles is the best way to do it because I have to know what these numbers mean. And an absolute value, I always give the example of the VIX index, doesn't mean anything. The VIX index right now at, well, it's not at 15 anymore, but what was it at? 1667. But right here, you can see the VIX did have, a period there a few weeks ago where it was dipping into the 13s and 14s. Well, you might say, well, that's not that low, right? Remember that the mode of the VIX is 12, right? The VIX spends an enormous amount of time between 11 and 13. A lot of those handles are 11 to 13. Right now, 1664, that's just an absolute number. That means nothing, right? You can't compare 1664 in 2023 versus 1664 in 2017. I'm not sure it got to 16 in 2017, to be honest. It's the lowest volatility year in history. So, of course, you have to use percentile ranks and determine where this absolute value actually ranks, right? The numbers don't mean anything on their own. It's like I said before, it's all about relative values. It's all about changing momentum. It's about measuring this metric to this metric and this one, the ratio of this to that. So yeah, everything I do is percentiles so that it can spit out a single value that's useful for trading. It's kind of what the barometer is for. I'm trying to get something that if it says 65, okay, 65, I want to be in these 4 assets, right? If it's 32, okay, well, these are the best ones to hold then. If it's 89, okay, I'm long vol for sure. That's the point. If one waits for expiration of the put, I assume you mean for the Wheel of Fun that we just did, but one's account doesn't clear until after market close, I know where you're going with this, does that mean one has to have 2 times the cash secured amount to place a new trade? Yes, it does. You can't do it on a cash account if you don't have the space for it. So essentially what you're getting at, and of course it's obviously this is what's going to happen. Let's say you've got no buying power left. Well, you can't do what I did today. You can't just, what did I do today? I have 10 contracts that haven't expired yet on this contract, and then I just kind of pretended that it was going to expire under, and I was going to get assigned. So then I bought 1,000 more shares of the VXX. Well, obviously you can't do this, but you couldn't even, let's say I have my 1,000 shares, but you haven't waited until this one clears, right? Those clear over the weekend. So your buying power is going to be significantly influenced. And you might get one of those weird situations where you might get a last like 15-minute margin call, not because you're in terrible trouble, just because your broker doesn't know what to do with this. You're initiating positions without enough capital. And yeah, it's going to be a problem. So if you have a cash account, there are times when you just can't do this strategy. It's the type of thing where you definitely want to initiate your covered call before the weekend, right? Because you're going to be getting the shares on Friday. And essentially, it's not going to clear and you're not going to see them until Monday, but you got your shares, right? You want to initiate that covered call so you have some protection on that trade. If you don't, if you say, well, I don't have the capital, I'll initiate the covered call on Monday. Well, what happens if on Monday you log in on Monday and the VXX just had a massive volatility crush and it's down at 23.50 now? Well, now your shares lost $1.50. And your covered call is going to be garbage. So you didn't have that protection. At least if you sell the covered call when it's at 25, it's going to be a big premium covered call. And then, hey, yeah, if it goes down, you're going to be fine and you can sell more. You understand what I'm saying, that you don't want to leave these positions unchecked, right? It's the same thing on the put side. You kind of do have to just have the cash available. And if you don't, skip it because not worth the trouble. As I showed before, I mean, I've got 15, 20 different strategies. I don't need to get married to one of them. If you can't do it, then you can't do it, right? There are some people who can't hold certain ETFs. Well, that means you can't do this strategy. You have to find other ones that work. That would be a good example of one. If we do a cash secured put on a stock and the stock tanks for some reason, our short put would bleed because the delta and vega together. How do we manage that? So yeah, that's true. So there's 2 things you can do. First of all, the reason that I do weekly churning on these trades is because, yeah, it's true it can go down pretty fast, but on a weekly basis, I can probably still stay ahead of things and still be trying to generate kind of decent premiums, right? So that's the first thing that you can do. But the second thing, of course, that you want to always keep in mind, and I covered this in previous live streams, is I use a 10% total value stop loss on these trades. So if this thing goes from $24.50, and right now this is a trade that would cost $2,450 of capital. So if this thing goes down to here, anything past $21.38 by next Friday, that would breach my stop loss and I'm out. And that's a pretty conservative stop loss. You could go further if you wanted because chances are it's not going to just cascade for several weeks in a row. You're going to get a little bit of relief there, and you're going to be able to catch up on your premiums, basically. But yes, always initiate that total value 10% stop loss because, like you're saying, and again, it's not always on VXX. You can't get into much trouble selling puts on VXX. Trust me, you're going to get a week there where nothing happens. It just flattens out and you can get a nice covered call and you can catch right back up. So it's not a big deal. But if you did a short put on something like a stock like Amazon or Nvidia and it goes the wrong way, be careful because those things can tank very, very far. So always trade with a stop loss. 10% total value seems like a good number to me. Most of these trades for me are very uneventful, like you saw 7 weeks in a row, just kind of very consistent, nailing this thing. It's not difficult to as long as it's not cascading too far, it's not overly difficult to catch up, even if you're behind a little bit, and you're going to be fine. Apple, not so much. Apple can, crush your dreams if you're not careful. So 10%, stick to it. Don't be that person's like it gets to 11 and you're like, just give it one more day. Let's just stay, because it could go from 11 to 20 in a heartbeat too. So stick to your stop loss. VXX, you shouldn't need it. I don't want to say never because I'd have to go through my long-term trading record, but I can't remember ever needing the stop loss when I'm doing the short puts on the VXX because, like I said, premiums start to get pretty juicy when it starts cascading down, and there's always something you can do. But on individual stocks, you hit the stop loss. I'm not going to say often, but it's not uncommon to hit stop losses when you're doing the Wheel of Fun on individual stocks. Got to remember, selling a put option doesn't really reduce your downside risk more than that little premium that you brought in. So if you sell a NVIDIA put option, you bring in $1, okay, you've insulated your downside by a single dollar. Great. It's not that big a deal. So if you wouldn't ever hold NVIDIA without a stop, don't ever hold a short put without a stop. It's basically the same thing. We went into SVXY on August 1st, and it's been down 4%. Correct. Tactical volatility was in cash before August 1st. Correct. Oh, you're asking this before I explained what happened. No, essentially, it's just an internal thing with VTS, right? We are reintroducing a strategy that has been out of the portfolio for a year, right? It's not always... it's not always these allocations, right? This is my portfolio. I'm not trying to show off in front of subscribers to make a bunch of money. I'm not trying to introduce things that are flashy and get a bunch of eyeballs. This is literally what I do with my own cash. So there are times when I have to cycle certain things in and out. And tactical volatility, in the 12 years we've been live with our VTS portfolio, it's been in the portfolio for 11. It just happened to be removed for a year because conditions in 2022 were not very ideal for shorting volatility, to be honest. It was not cascading downward, so the long vol didn't really help. And it's just down, or I guess inverse the other way. But so we reintroduced it. And I wanted to make sure that I had enough of the course lessons before I actually jumped in. The strategy itself initiated on March 24th. We initiated on August 1st. And yeah, I don't know if it's 4% down, but it's down a little. It was up, then it was down, then it was kind of making a little bit of a recovery now. 4% sounds reasonable. Yeah, August has not been very good for the market. But we didn't initiate it for any reason whatsoever on August 1st, other than you got to reintroduce a strategy at some point. I mean, you have to, it's like that, jumping rope where people kind of standing on the outside and you're watching it. And you got to jump in at some point or you're not really doing anything. So we were just doing that. We were, I think I introduced it in July. I said, look, we're bringing it back. Did a couple articles. It's coming back. But I didn't jump in July. I just thought, well, I'll set a date, right? No matter what's happening in the market, August 1st, that's the date. And I stuck to it. August 1st, we jumped in, and wouldn't you know it, August hasn't been a great month so far. This is the S&P 500. Of course, the SVXY is, not doing fantastically well. So we are down from, I think the initial entry was just under 88, and it's now at 84. So yeah, not great. But of course, it's a strategy that has made, and my live trades are much better than the spreadsheet. One of the lessons in the course that you'll see, I think it's lesson 2, is talking about the difference there. And my live trading is over 40% a year, but the spreadsheet results that don't match up exactly, right? Spreadsheets, end of day results, and mine, plus the changes that I make. I've been very good at sort of calling audibles and, dancing around a little bit, and I've done much better than the spreadsheet. So something that's made 30 to 40% a year being down in August because the market's down, I'm not trying to say I'm happy about August. Down 4%, that's not fun. But let's have a little bit of perspective, right? My kids are listening to the live stream. Financial education first. That is awesome. I better better be careful, right? I better tone it down. My live streams are R-rated for sure, right? No, I'm, like I said before answering the other question, I'm not a prude, but on YouTube, keep it clean, right? So kids are invited. That is amazing. I don't know how old they are. They've got to be sleeping, right? There's no possible way. Even adults are listening to me talk. It's like watching golf on the couch. There's no way you're getting through this without falling asleep. So I think your kids are probably screaming to get outside and go do something better. This is weird. Pat Benatar reference. Well, I'm old, so I know who that is, but I can't remember making a reference. It's not like I was a fan. Wasn't there one song back when I was in, God, I must have been in grade 7. There was a super famous Pat Benatar song. What was it? I can't believe I don't hit it. Usually I'm nostalgic for those old 80s songs. Anyway, you know the one I'm talking about. But did I reference it? I don't know. It's kind of odd. Maybe just accidentally. As VTS Options is not currently available, where would you recommend going to learn more about option strategies? Unfortunately, this is the same thing with asking me for book references, asking me for, hey, who should I follow on Twitter? Unfortunately, I'm an extreme workaholic. I'm always immersed in, this is going to sound extremely selfish and borderline arrogant, but I don't follow anybody. I don't pay attention to anybody. I don't learn from anybody. I don't have a mentor. I just do my own thing. Everything at VTS is just built on my trial and error over the last 17 years and my ability to be A, very analytical, B, I am pretty good at math. Obviously, I have a math degree and I tend to understand numbers rather than Shakespeare, for example. And C, I'm just a serial workaholic. 10 hours a day for 17 years, no days off. You tend to learn quite a bit when you're that type of person. So I wish I could tell you, but I can't really say because I just wouldn't be doing it justice if I threw out a couple of names here because I really don't know. Follow me. There's plenty of content here. Between me and find a few others, I think you're going to be fine. I would say that in general, maybe I'll go on a little side tangent here, but in general, people tend to get paralyzed by focusing on learning a little bit too much and not doing enough, right? They watch a video and then they want to watch another video and then where can I learn this stuff? Well, one thing you should do is learn on the job, right? So if you're not actively trading, you're not doing it right. There's nothing wrong with education. It's actually extremely important and it can speed up your learning curve a lot, but it has to be in conjunction with you doing your own trading on your own. So I would say that between all of my articles, videos, and live streams, and you're diving into trial and error, keep it small if you're new, but keep it live trading, get in there, mix it up. You got to get in there and compete. You can't be on the sidelines just watching YouTube all day, learning about this and learning about that. No, you got to get in there and actually compete. And that should be almost enough for you. And then possibly I should dive in a little bit and maybe I should try to get a very short list together of people who I could direct you to. Right now, just in good conscience, I couldn't even throw out a name. Discman. Yep, Discman. I used to run with a Discman. Well, we used to run with that, I don't know how old you are, real chunky tape player, right? When I first started running, it was the coolest thing in the world. I was so proud of this tape player. It was just bright yellow and it had like gray rubber all over the side and you could drop it and you could put it in water. It was amazing. It was top of the line tape player. It's probably this big. Again, it pulls your shorts down. So you're running and you're constantly having to pull your shorts up. You have to cinch your belt so tight. You get red lines and rashes on your hips. I'm an 80s baby. So that was the plight of running with Walkmans and Discmans. Crazy. Logged in, and my comment on YouTube's episode 65 is there, but log out and it's vanished. Well, I cannot speak on that, but I promise you, I like your questions a lot. You are one of the most, I don't want to compare because other people are like, hey, what about me? But no, you've asked some exceptionally good questions in the last several weeks. I assure you, absolutely no intention to stop answering your questions, and certainly not blocking. That's just not who I am. I am one of those people who just believe that, look, if somebody's acting like an idiot, instead of blocking them, the best thing to do is to just let them talk, right? What is that old saying? It's best to be quiet and be thought a fool than to open your mouth and remove all doubt. You let these people just hang themselves with their own words. When people try to insult me, right? Swear at me, call me a fraud, call me a scammer. There's one of two things that I will tell them. The first is that if you watched my content, you may not agree with everything I say, right? We all have our style and our thing. It's fine if you disagree. There's no way that you could watch my content, read my articles and videos, and genuinely think I'm a scammer. The only way people have a negative opinion of me is because they've watched half a video and they know that I have a subscription service. And that combination of ignorance plus an industry that is rampant with scammers, put two and two together, this guy's a fraud, right? If he was so good, why would he be charging money for his signals, right? These are people who haven't even done the most basic math on how long it takes to actually grow a retirement account. They're like, hey, why don't you just trade your own account? I do. I have for 10 years now, 15 years now, doing exceptionally well. It takes time to build. There's nothing wrong with on the side having a job. Instead of putting on a suit and going on Wall Street, I decided to do this. There's nothing wrong with this. But that's the first thing, is that give me a chance. You're never going to leave with the impression that I'm a fraud. Like, just couldn't happen. You couldn't misread the situation that badly. The second thing is, I don't care. I don't care at all. I mean, this is one of the things that people just, for some reason, they just consistently don't understand, is that if something isn't true, it's not an insult. It's just not, right? There's nothing that you could say. If there's no shred of truth to it, they're just random words. They're just sounds that are coming out of someone's mouth. Calling someone a scammer who isn't, calling someone a liar who isn't lying, where's the insult? I don't even understand what they're trying to get at there. So, yeah, come on. But I do get a couple of hate watchers. But again, to get back to you, I promise you're not getting blocked or anything like that. YouTube might be doing a few funny things, because one thing that I will tell you, and I don't know if this is what's happening to you, but sometimes YouTube, if you put too many comments back to back, it assumes that you're being belligerent, right? The algorithm will pick up on that. There's a certain combination of words, but also just the timing of questions. And I do notice, you can keep doing it. It actually helps me organize my thoughts. But I have noticed from you, there's just like, sometimes it's just like rapid fire questions, 5 or 6 in a row. Could be that. I don't know. I really don't know. But confident, not arrogant. I hope that means me. Like when I said I don't mean to be arrogant. I'm not an arrogant person, but I am an extremely confident person. Confidence is one of those things that you can't fake it, right? Of course, you can't lie to your own brain. We are only confident if we have reason to be. You can't just wake up one day and be like, I'm the greatest. No, but actually, there's a fantastic quote from someone named Alex Hormozy that kind of sums this up. I don't want to butcher it too badly, but he said something along the lines of, confidence doesn't come from screaming affirmations in the mirror. It comes from having a stack of undeniable proof that you are who you say you are. Something like that. Fantastic quote. That's what my life experience has brought me to. I'm at a point where I went from being a nationally ranked, medalist in swimming and triathlons, and then I picked up golf and I became a professional golfer, and I got the best grades in all the academic scholarships. And I'm not bragging here. I work just crazy hard since I was 5 years old. My mom and I were, on the phone the other day talking about this, that, when normal kids were in school, 7-year-old kids, they're in school, they're feeling a little bit stressed out about just going to school. Well, I mean, I was in 3 different sports. I was in the pool for more hours in the day than I was in school as a 7-year-old. At 7 years old, we used to train Tuesday and Thursday morning and night, 2-a-days at a 7 years old. So, I mean, I've been doing this my whole life. I've just been an absolute workhorse my whole life. When I was in school, I did 2 degrees plus played professional golf. Just managing my time to the point where, I mean, we've all got the same 24 hours, but I do get quite a bit out of mine. So confidence comes, as Alex Hormozy would say, by having an undeniable stack of proof that you are who you say you are. So sometimes when I speak, other people might listen and think, well, that's arrogant. Well, wow, that guy's talking about his investment returns like he's some great trader. Yeah, I kind of am. I have a stack of undeniable proof that I am who I say I am. So when I speak, I love this because I certainly hope I don't come across as an arrogant person. I do try to be, my humble Canadian and not throw it in people's faces. But yeah, I've done well at all stages of my life. I've always risen to the top, not through natural talent, not through, natural ability, not through opportunities being thrown my way, just simply outworking everybody. That's what it has come down to with me. And so I'm 48 now, and for literally 40 years, I've been working insane hours with no breaks. So sometimes my statements might come across as arrogance. I assure you it's just confidence. Okay. Percent rank seems like a kind of a normalized raw values. I don't really know what that means. Probably same question reflecting the barometer. But of course, you have to normalize everything to get that final value, right? If it wouldn't mean as much if it wasn't consistent across the board. So all the metrics, if this is the same question, all the metrics are percentiles. Okay, this is interesting. You stopped sharing non-leveraged metrics and charts this year. Yeah, I did. Stating that most members prefer trading the leverage version. Why stop the transparency? No fund would do that. Well, first of all, I'm not a fund. I hate that word because it's hyper specific to the investment industry. Like, to be called a fund means something. It's not just, I know a lot of people on Twitter say, oh, I manage a fund. Nope, you don't. The word fund actually means something, but let's just ignore the semantics. I'm just stickler there. But as far as transparency goes, it's not about transparency. You can email me and I'll show you anything you want. It's basically just about not bombarding everybody with things that complicate. You have to understand that my average subscriber isn't you. I think I mentioned to you before that without putting a big circle around you and making people feel in relation less than, I don't know why people in this world think that. You say, I like that. People say, oh, why don't you like that? I didn't say that. I just said I like that. I didn't say I didn't like this. But if I say that your questions are exceptionally good, there might be people who say, well, what about my questions? Are you saying mine are bad? No, I'm not. Just saying that this person's questions are exceptionally good. You're not my typical follower. My typical follower wants a certain level of simplicity, or it's just you've seen my work. It's just a bombardment of articles and videos and metrics and strategies. And I mean, it's overwhelming for most people. I'm terrible at that. I'm really just a math geek at heart, and I'm very bad at marketing and organizing things, and I don't do that very well. So over the years, I've dealt with a very ugly email inbox where I spend 5 to 6 hours a day answering emails, and certain things have to be removed in order to relieve some of those questions that are just coming in, right? Not to say out of sight, out of mind, but kind of, right? If I'm not showing a website that's ultra complex, you'd be amazed how much relief that has on my email inbox. But don't think that I'm not transparent. If you want to see the non-leveraged strategies, I'm an email away. It's very, very simple. Okay, good question. Do you use a hard stop or a soft mental stop? For me, basically across the board, I use soft mental stops. So essentially what he's getting at is, I think I was talking about the 10% rule. If it crosses this line, you can actually set automatic stops in your trading software so that if it breaches any certain point, you could easily, I mean, it's only 10 contracts, right? I could easily calculate the dollar value that it crosses here and set that stop up. But I don't do that. I'm in front of my computer all day, every day, never miss a day. So for me, stops don't really do anything because in a fast moving market, it's going to be bad fill prices anyway. So you kind of don't want to use stops. And then overnight, you can't do anything about the stops, so there's nothing useful there. It is best, in my opinion, and I've been doing this for so long, and it's never cost me yet. Did you hear that? Knock wood. I just use a mental stop. So if it breaches somewhere around here, I'm just going to close it. It doesn't have to be an exact science, 10, 12, 13. Who cares? It's all sort of meshed together in the randomness of trading 15 strategies together. But you can just hard stop everything. Same with our Iron Condors. There is a way to just, I send out the stop gain and the stop losses, the 50-50 on both sides. You could do a hard stop if you want. I just wouldn't recommend it. I think that options trading is best done with limit orders while you're sitting in front of your computer. Now, it is true that not everybody has 10 hours a day to sit in front of their computer and do investing stuff, but I just saw this. I hope you don't mean the age of your kids. Not everybody's in front of their computer as much as I am. So if you are in a situation, let's say you're at work and you're trying to squeeze this in, you might have no choice. You might just have to set stops throughout the day. If you get 5 or 10 minute break from work, lunch break, something like that, you can just get out, set your stops for the day, and you can definitely do it that way. Mostly random walk, right? If you do it hard stop or mental stop, there's not going to be a whole lot of difference between those long term. Trade to trade, maybe. Law of large numbers, large trade frequency, it's not going to make one bit of difference. Is VIX Options compatible with VTS Portfolio? Could we trade both? My VIX Options strategy, I would say, is, dare I say, compatible with every single strategy, every single portfolio for every investor in the world. And the reason that I say that is because it's totally uncorrelated to everything else. It's at the moment minus 11% correlated to the S&P 500, something like that, and super low correlation to anything else I do. It's really independent of everything. So there would be no reason why somebody couldn't plug in a strategy that, makes 30% a year for 13 years now. You could just plug that into any exposure that a person has, net long, net short, wouldn't matter. It is independent. It is totally uncorrelated, basically zero correlation to the market. And, why wouldn't a person just add that? So yes, add it to anything you want. Now, you don't have it yet. I have to, get after it in the laboratory and pump out those videos and get the service back up and running. But when it hits, yes, I've been trading it consistent, never missed a month. Do you like TastyTrade strategies? I get asked about Tasty a lot. It's like I said before, I don't watch anybody's work. I don't have any time to watch anybody else's YouTube videos, so I haven't seen a whole lot. But from what I have seen, are there strategies or are there just general education? I have not seen, and I could be totally wrong, obviously, because I don't watch it, but from what I've seen, I don't know if there's any actionable strategies. Are there? There's no, like with VTS, it's just a rules-based, here's my portfolio, here's what I'm doing, follow this, pay me the fee to see the portfolio. That's how this works with me. There's no ambiguity. You know exactly the trades, the strategies, what they mean, why we're getting into them, the days, all of it. Is TastyTrade? I don't think it's that. But again, I'm speaking pure ignorance here. I have no idea. For all I know, it's just a totally structured, organized, follow these trades and you'll make money type thing. Education-wise, it seems to be doing well. That's not always an indication. Like follower count doesn't always matter. In fact, it typically means you're being a little bit controversial. That's typically what it means. So I know Tasty's extremely popular. They have a lot of followers. So what it might mean is they're offending enough people that they've just got a huge follower count. I am not controversial in any way, shape, or form. So I don't do well on Twitter. I don't do well on YouTube. The thing about the algorithm that people don't understand, and all social media algorithms are the same, is They're not actually measuring likes, right? Giving a like to a video is the same thing as a dislike. In fact, a dislike is probably better. What they want is engagement. And what makes people engage with content more than anything else in the world, by a mile, is conflict content. I call it conflict content, when you're doing your best to keep your core audience, but you're also, strategically trying to offend other people, because that's what's going to get people to make comments. That's what's going to get people to hate watch you. That's what's going to get people to engage in your chat section. If you're doing conflict content and you're offending enough people, your engagements are going to go through the roof. That's why the most famous people in the world right now, the people with the biggest followers, the Chamaths of the world, the Elon Musks and the Andrew Tates of the world. Why? Because they're strategically offending 80% of people with everything that comes out of their mouth. If I say something that you agree with, you might give my video a like. But if I say something that offends you to your core, you're going to give it a dislike. You're going to leave a mean comment. You're going to follow your comment. You're going to come back and make sure that you can read the comments that commented to your comment. And it's going to be a massive snowball, right? So that's what's actually happening, is that, I can't say for sure, but given the popularity of Tastyworks, or TastyTrade, I would imagine they're saying things that a lot of people are like, no, that's not right. I've heard something different here. This person says something different there. My content isn't really like that. I don't offend anybody. I don't say controversial things. I've had 2 people hate watch me. I wish there was more, because it does count as engagement. I wish more people thought I was a scammer, but I've really only had 2 or 3 in the 12 years that I've been at this. Conflict content gets eyeballs. So Tasty is 10 times more popular than me. Could it be because they're so awesome? Sure, maybe. Could it be because they say some things that you're kind of like, well, wait a second, I need to leave a comment. That's not quite right. You said do this, but here's what I think, They're probably getting a lot of that. So I don't know. Anyway, side tangent rant, unimportant. Okay. What time is it? My wife's probably so angry. An hour and a half. Every time I turn on the camera for a live stream, she reminds me to keep it to an hour, and I never do, because I always want to finish the questions. So let me try to just lightning round this. TastyTrade strats are typically selling 4 to 5 DT strangles on high IV. Come back. High V underlines 3 to 5% per trade. Well, I mean, that's not going to work, obviously. It's the same thing that I've explained many times. The options market's very efficient. So if you're doing anything on a time schedule, your expected rate of return is pretty close to 0 minus trade fees, right? There's no edge in just saying, oh, I'm going to sell 45. Now, you're probably not doing it justice here. I understand that there's got to be an edge that they're adding somewhere, right? You can't just sell 45 DTE on high IV rank stuff and expect to make money doing that. That's, low hanging fruit. Doesn't everybody know that already? Why would that produce a rate of return? Just doesn't even make sense to think the options market is that inefficient, that you could just do something that simple and just money falls from the sky. So I'm sure you're probably missing something, or, just for brevity, not really explaining it thoroughly, but can't speak on it. I don't watch them. I know who they are. That's about it. And even if I disliked them, I wouldn't say negative things, because it's just not my personality. I would just say, yeah, it's not for me. Obviously, I'm confident that I'm better, but that gets back to the long, multiple decade track record that I've put together. Obviously, I think I'm pretty good at this. Okay, I have a long question, but the maximum character is 200. Email me. I'm glad that you missed it, because I'm supposed to get off this live stream. Sorry, disregard my previous question. I didn't realize you already answered it. That happens because I tend to ramble and drag things on during our data stream, like the segments in the beginning. And then, I have to sometimes say, oh, already answered that, 30 minutes ago or something. People come late, whatever. My live streams are pretty casual. Please let us know what the locals thought about a Chinese invasion. You'd be amazed how much this comes up. Obviously, I live in Taiwan for a part of the year. And I got to say, it's near zero. I mean, the talk of the Chinese are coming, it's near zero. I think the Western media And look, this is just tinfoil hat stuff for me. You don't have to agree with my politics if you want. I'm kind of one of those equal opportunity offenders. I hate all of them. I hate Joe Biden just as much as I hate any other Mitch McConnell or Lindsey Graham or Chuck Schumer, Nancy Pelosi, Barack Obama. I could go on and on, George Bush, hate them all. I always have the understanding that, look, you can't get to the elite level of politics without greasing many pockets, without doing many shady deals, without being very corrupt to the core. It's not possible to reach that level of politics. So equal opportunity offender. I'm not a Republican or a Democrat. I hate them all. But I will say, and again, disagree with me if you like, but it feels to me like the U.S. and the media machine and the military-industrial complex is trying to drum up conflict with China. Now, I will tell you, as somebody who lives in Taiwan, 17 years now, married to a Taiwanese woman, very close with the family, the number of conversations in 13 years that we've had about China is zero. It is not talked about here. So I don't know what I don't watch the media. I don't watch the news. Like I said before, I don't watch other people's YouTube. I also don't make time to watch, MSNBC or CNN. I mean, I wouldn't waste 1 second of my life listening to Anderson Cooper or, let me say, Tucker Carlson or, equal opportunity offender. I don't think Jake Tapper is any better or worse than Sean Hannity. I mean, they're all that's my personality. I think they all have their own agenda. They all have their own slant. So I just universally ignore, all blocked in, mental block. But genuinely speaking, I'm going to say, I think this is a Western media thing. If China, I don't know if I'm going to get my YouTube demonetized or not, but if China did invade, I promise you there wouldn't be a conflict. It would be negotiated out. There is zero possibility that Taiwan is going to fight back or something. It's just, come on. It's going to be very orderly. It's going to be welcomed by many people here. Not everybody. They have two parties as well. And one of the parties is probably not going to be pleased, but there's not going to be conflict unless the U.S. kind of does the U.S. thing. So I don't know. I wouldn't pay too much attention to it. I did see an interesting thing on Twitter today. I just caught my eye because I do live in Taiwan part of the year. It said that Taiwan is spending less money on growing their military than they've ever spent before, like on a relative basis or something. That makes sense. I mean, why would you care? They're not going to be a conflict. And eventually, maybe 2 years, maybe 20 years, we don't know. But Taiwan will be sort of Hong Konged back into the mix. It's just going to happen. So Ecamm skipping chat questions. Yep, happens all the time. I don't know what it is about Ecamm. I love the software. It's so easy to use. For an internet dummy like me, it's pretty awesome. But I have noticed people complaining. And when I cross-referenced the actual YouTube channel versus the Ecamm chat that I see, there are questions missing. So I don't know why. I hope they get better. They are very good at doing updates and new versions. Hopefully it does. My coworker is convinced China will invade Taiwan soon. Just give an anecdote of a random viewer in America. Yeah, I would say that if you're consuming largely Western media, it seems imminent that there's going to be some big conflict. Taiwan's going to fight back. The U.S. is going to have to send, sort of like the Ukraine style stuff where they're not really getting involved, but they're kind of totally involved. And I don't think any of that's going to happen. I just think it's a distraction. I don't think there's anything wrong with China slowly working towards a diplomatic reason to take back. I mean, are people seriously telling me that England wouldn't do the same thing? If they had some thing that was totally under their control and then it kind of branched off and they're doing actually really well and oh my God, their economy's actually pretty good and people love to live there, you're honestly telling me there's a Western country that wouldn't have sooner than China taken it back? I know that there's many reasons to demonize China, but they haven't actually started that many wars, to be honest. So I think, again, I'm not I'm not a communist. I'm not a socialist, but some of it is Western media demonizing a future perceived enemy, I would say. Here, not much chatter at all. I'm going to Japan for 3 weeks on vacation. I love Japan. Do you recommend visiting Taiwan while I'm in the area? I hope my wife's sleeping when I answer this. No, Japan is definitely, I'm not going to say better. Of course, there's no better or worse, but you'll have a much better vacation in Japan than you would in Taiwan. Taiwan's great, but it's more of a place to just live. It's very convenient. Weather's good. People are awesome. The food is amazing. It's kind of one of those places where if you really wanted to live somewhere in Asia, Taiwan's very approachable and it's a very easy place to live. But as far as visiting, if you've just got 3 weeks, you're probably looking at Japan #1 and Korea #2. And Taiwan is a very distant, like 10th in Asia. I'd rather go to Thailand. I'd rather go to Vietnam, Cambodia. I'd rather go to Japan, Korea, China. I'd rather go to many places in China. But as far as living in one of them, I'd rather live in Taiwan than any of the ones I mentioned. So it's kind of one of those things. Terrible for tourism, really good for living. If you wanted to be an expat in an Asian country, yeah, that's how I would answer that. Skip Taiwan, have an awesome time in Japan. It's one of my favorite places in the world. Just want to let you know that I truly appreciate the effort you put into sharing your content. I appreciate that as well. I sometimes come across as aggressive. Nope, not to me. Thank you for being so responsive and engaging. The only reason that you might get that sense is it's possible I've skipped some of your questions, but it's not because, I feel any certain way. It is quite simply, I am ridiculously overwhelmed every single day with work, and every time that I go to sleep, which I should right now because it's 2:42 in the morning for me. Every time I go to sleep, I know that the second I wake up, there's more work tomorrow than I could possibly ever finish. So there are times when after 12, 13 years of answering questions, hopefully you can understand. I think I have extreme patience, to be honest. I think I'm just like Buddhist Zen master here with questions because 13 years of answering the same questions, and people say that I appear to be engaged with them, and I'm genuinely answering the questions as if it's the first time it's ever been asked, even though it's number 189. Yeah. So it's possible that some of your questions fell through, but nothing to do with you, my friend. I promise you that. All right. Enjoyed the live stream. An hour and 42. What's wrong with me? I talk a lot. You know what it is? I don't have a whole lot of friends. I don't go out much. I don't do much. I work out, I run, I go to the gym, and I work. That's pretty much my life. And hang out with my wife. It's pretty much my life. Basically. So when I get on a live stream, even though I'm sitting in a room by myself, sometimes it does feel like there's, a community sitting in front of me. So, man, I can rant. I can just go on and on, can't I? I spoke, an hour and 42 with no break after a 10-hour day of work. Something wrong with my brain. All right. Next week, we'll try to give it an hour, but I suspect it'll be longer. All right, thanks for tuning in. And like I said, I'll clean up my Wheel of Fun strategy trade, make it look like it never happened on a Thursday instead of a Friday. And next Friday, we will have an expiring trade to update. And then I think next Friday, I might do a sort of a jumbo video on entering a bunch of live UVXY short volatility trades and comparing, butterflies versus verticals versus, Iron Condors, and kind of set like 6 or 7 up live in the account and let them sit there for a while. And we can talk about how each one of them is doing. This one's doing worse than that one. Why is this one performing so well? One of those things. So you'll never stick to 1 hour. There's no chance. There's 0 chance I could ever do an hour live stream. If it wasn't almost 3 in the morning, I'd keep going. But I should probably go to bed. All right. See you next Friday.